Hello, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 24th of October, 2008, and we had another amazingly volatile session here today. The S&P 500 closed at 87.02, and I believe that's a closing low. 88.50 was the low on the 10th, so we did have a closing low for the day and for the week and for the last several years as well, obviously, and this market just continues to deteriorate here. We have a green candle. All that means is that the market closed higher than where it opened. It doesn't mean it was a bullish session. In particular, when you look at the 1 minute time frame, we saw that big gap lower, and it seemed as though the market was headed for a retest of it when it broke down back below this VWAP and created a lower low here. But looking at the definition of trend, even on a very short-term time frame, such as a 1 minute, lower highs and lower lows, when it gets past this high here, there's no business being short in a stock like this, and that support actually, or that resistance actually became support, and so on, right up till it broke down once again. So we had a huge amount of volatility. It looked like maybe we were going to be able to close them strong, like we've seen the last 2 days, that is Wednesday and Thursday of this week. We saw that big volume in here towards the end of the day, but it just never was able to really push back up again. When we look at a 10-minute time frame, this trend line has been intact and remains intact. You can see it a little bit more clearly maybe on the 5-minute time frame based off of yesterday's close here. The market isn't going down as much lately. It's spending more time in here. It just seems like we're almost to this maximum frustration point, but it's definitely not a reason to be a buyer. The market continues to destroy the equity of people who try to pick the bottom in here, and a couple weeks ago people were looking at a double bottom, and obviously that never materialized. We still have this 5-day moving average declining at a pretty rapid rate. It was basically at 94 yesterday. Now it's down at 92. So at a minimum, we're going to need to see it take out that level, and perhaps breaking this trend line gives us a test of the 5-day moving average, or even these highs in here. So you got to still remain very defensive in here. PEs, get lower. All kinds of valuation tools, might flash buy signals. Same with stochastics or MACD and that sort of thing. But only price pays, and price continues to be very difficult in terms of turning higher. It just is unable to hold on for any period of time. I pointed out yesterday that we're seeing some encouraging signs with the late day volume the last couple days, but it's still, the buyers haven't gained control yet. So maybe we're near that level where we're going to see a big rally materialize from, and that's the bait that keeps everyone interested. That when we get a rally, it'll likely be a big violent one. Meanwhile, preservation of capital, you can go in there on these shorter term time frames, the 1 minute, 2 minute time frames, but if if the market starts telling you get out, that's what you've got to listen to. Hope is not a strategy. The Russell 2000 also closed down at a new low, down at $47.17. We saw that this market lose 3.7% today. Looking at the 1 minute time frame, you saw that initially it rallied, finding support along the rising daily VWAP, and this market actually held up better than, for instance, the S&P 500, but still, it's obviously not bullish in here. These trend lines are going to be most important. First technical level of significance. It also coincides with the place where we found this resistance today at about $48.35 or so. So maybe getting above there, with stops below here, it can rally up towards that 5-day moving average, but it's still a broken market. Risks still remain high, and the bottoms are a process. They're not an event based on 1 day's gap lower and that sort of thing. We'll know well after the fact when this market has actually made a bottom. Anyone who claims to know otherwise will make that repeated claim over and over again. Gold was up a little bit today, $1.56 on the GLD. It's below the declining 10, 20, 50, 200-day moving averages. If you're long gold, I would suggest on rallies that that you get out, because we're in a bear market for gold. That's what price is saying. Forget about the logic of what what reasons there are to buy gold. It's no different than what I pointed out yesterday, that it looked like maybe oil is coming into a level of support, but it's clearly not a reason to buy. A lot of people, I think, got hurt by this OPEC meeting. OPEC decided they were going to cut production, and the rest of the world said they were going to cut prices on oil, so it didn't matter. Prices rule above all else. Again, OPEC isn't bigger than the markets. Our U.S. government is not bigger than the market. You have to look at price only. We've still got a declining 5-day moving average, and people who are trying to pick a bottom in here, lost another 6.3% in the USO today. So obviously not a good strategy to buy, thinking that oil's gonna be able to move higher because of something that the OPEC members say. The financials were down 74 cents, or 5.11%. Again, the $17 to $18 level is going to be key here for the next month or so. And this market, what we saw this week was that it broke this level of support, and since then it's just in this pattern of lower highs and lower lows. You got to look at these major trend lines in here, and this market was struggling with it late in the day. Let's take a look at that on a 5-minute time frame. Here's the most relevant trend line right here. And again, breaking a trend line doesn't mean that the market is reversed. I wrote at length about that in my book, what it means is the rate of descent has slowed more than anything. It doesn't mean that you have to reverse because this trend line that we draw in it has been broken. So financials remain in a bear market, as does everything else pretty much. The NASDAQ 100, the Qs were down 98 cents, or 3.2%. They were obviously, they closed higher than the open, but they also closed lower for the week once again. And on the monthly time frame, you can see that we're looking at levels not seen since let's take a look back since early 2003. So this entire bull run has pretty much been close to wiped out here, just over the course of the last several months. Looking at a 10-minute time frame, you can see here this trend line. The market got above it a few times in here during the day, late in the day, but was unable to convincingly hold above it. I was also pointing to this little trend line here, a little bit more magnification of it on the 2-minute chart. We got that rally. It came with some volume, but then it just came back down, and late in the day hit on the daily VWAP a couple times and basically closed right on it. We're in a bear market. Hopefully you're still preserving your capital and keeping it available. Maybe it gaps higher Monday, who knows, but you're better off being in the sidelines, wishing, whatever the saying is. My mind's fried. It's been a long week. Have a good weekend.